Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Matt McDonagh. Matt, thanks for stopping by the studio today.
Always good to see you, Tim.
Let's start with the bread and butter.
Okay.
Bitcoin Treasury companies.
Mm-hmm.
What's going on? Where did we start? Where are we now? And where are we going?
Yeah, right. I wish I knew the answer to the last question, especially because I don't think I'd be here. I think I'd be doing something else. No, I'm joking. No, I think what happened and what is happening is a result of two things. One, we got irrationally exuberant at the beginning. Right? I think we saw how much return Michael Saylor was able to generate with MSTR. And we saw what happens when you become kind of an API between TradFi and the hardest money that's ever being created and all the advantages to that. Metaplanet, that for instance, they had like the only access to the Japanese market. So that it's kind of nice to have that because, well, asymmetry breeds demand and that pushes your price up. Well, predictable things are happening, right? As we're getting more surface area, more places you can place your bet on Bitcoin treasury companies. Well, there's diffusion, and that energy is getting spread out around. So at first, it was very exciting that bid up and prices were high. CEP was like $50 a share, and now it's $18. And I don't think it's any fault of the management team over there. I think Cantor is great. I think it's a reflection of the fact that the market was very excited about these things at the beginning, and now the market is cooling about them, and it's maybe having some thoughts about what's happening broader. Like gold got so hot, and I think it started attracting a lot of attention, and people are going to rotate to where there's energy. Momentum is a great strategy. It's really paid off. I've done a deep analysis like 150 years back. I launched a hedge fund back in the day, and I was trying to figure out like what strategy to look for. And I wanted to be a value investor because that just felt empirically correct to go look for dollars for 50 cents and then wait for the market to figure out that I was smarter than them. But like momentum pays because there's already energy there. There's already a bid. There's already people coming in. And yeah, like to some degree, there's a risk that you are the greatest fool and then you buy just as it peaks and then it starts to go down. And I'm sure there's some people that are worried that that's what's happening to their Bitcoin treasury positions, but I don't think that it is remotely. I mean, we were joking before, we said, when you first get a toy, you play with it, but then eventually the novelty might wear off or a new toy comes around. And now there's a lot of toys, back to that analogy from before, a lot of Bitcoin treasury companies. So some of us put them down, and maybe some of us chased after gold. Maybe some of us saw quantum stocks ripping and went after that. Maybe there was some geopolitical tensions, obviously, that we're worried about and we're taking some risk off. So these are all totally normal parts of the cycle. But I think anyone who's in those positions shouldn't get disheartened. And you should look for opportunities. That's the value investor in me, I guess, maybe starting to show my side.
There's been a lot of talk about like the pipe unlocks and then the Bitcoin price has just kind of been yo-yoing between 100,000 and 125,000. Do you think those are kind of two main factors, or are there other factors that kind of put this puzzle together?
It depends on your cap table to determine if the pipe problem is a problem, and I think that unfortunately we've seen it hurt Naka and another company recently, ASST or one of the, there's been some issues going there. But that just has to do with dynamics and, again, sudden changes and how many bidders there are and how many sellers. And when you have these unlocks, it can have some very dramatic changes in those dynamics, and that influences price. But I don't think it influences fundamentals. And, I think it said, I forget who it was, maybe it was, I think it was Buffett. He said, in the short term, it's a voting machine, but in the long term, it's a weighing machine, meaning, right now it's about the sentiment, but at long term, what this thing is really worth is going to be reflected in the price. And these companies are adding the hardest asset that's ever been created. And it's only getting harder algorithmically. I mean, Bitcoin is algorithmically insensitive to its demand. Like, I love gold. I have a gold ring on. Like, I enjoy the price appreciation on my very, very, very small gold portfolio. But the reality is, if gold went to $7,000 tomorrow, a whole bunch more gold mining would come online. A whole bunch of gold that was sitting in grandma's closet would get melted down and hit the circulation. Guys like Elon would get increasingly strong magnetic economic signals to say, maybe I should do a SpaceX mining and combine Boring Company and SpaceX and go do a Deep Impact or Armageddon, whichever movie that was, and go land and extract minerals and then bring them back. I mean, so the point is, and then the Chinese are claiming that they have just recently created synthetic gold, that I remember raising my hand in chemistry class because I learned about alpha decay. And it's like when you hit something with a high degree of energy and you can knock neutrons or protons off or something. Sorry, it's been a long time since that class. But the reality was it changed one thing from another to another thing. And I remember being like, well, can't you and it was like 4. It knocked 4 off. So I went 4 up from gold, and I was like, "Can't you grab whatever this is and just nuke it with this stuff and make gold?" And then my teacher was like, "Yes, but the value of this stuff is like $35,000 an ounce versus what at the time $700 an ounce. So that's not a good trade." And then you have to dump in like 3 nuclear submarines worth of energy just to like transform that material into gold. So taking a more expensive thing and then nuking it just to make a less expensive thing is not a good business transaction. So right now they're not going to be nuking gold into existence, but who's to say that we're not going to have like an absolute breakthrough, like small modular reactors, and we see the marginal price of electricity go to near zero. And then suddenly a lot of technologies become possible, including maybe transmuting other materials that aren't gold into gold. So that's not to spread FUD about gold. It's performed very well. It's the second hardest money that's ever existed. Definitely works, and it has worked, especially lately. But if you have done well in the gold trade, I would seriously consider rotating to Bitcoin.
So you're saying China probably did not figure out how to?
I think if they did, they are either fudging how much money they spent to do it, or there is something in the details that are going to make this obviously not a good economic play. Like they spent $1 million making $20,000 worth of gold is what I'm trying to say. And I don't know that to be the case, but in the past that has been the case. So, but and then there are all sorts of reasons why gold has done well. And the underlying reason is because people go to gold when they feel insecure. And there's lots of insecurity, whether it's geopolitical, like I've talked about, or the reason I'm insecure, and that's how much freaking money they're printing and have printed and continue to print. And it's the only solution that politicians seem to have is debasing our currency and basically creating a magnet that's pulling energy from basically from the workers to the asset owners. You know, inflation is a stealth tax, and it's a magnet that's pulling energy away from the people who are earning income like us and pushing it towards people who probably don't have like a direct business that they actually do. They just rent their money out to other people and create so much wealth on the carry that they're able to live like that. That doesn't work in the Bitcoin standard.
Yeah. Back to the treasury companies for a second. What is the best play for these companies now or in the future? Is it like digital and media and financial services and stuff that's all kind of online digital as opposed to a brick and mortar sort of deal? What will these companies potentially become? Because you see lots of announcements with lots of very well-known people in the space recruiting people like Jeff Park and Bill Miller and to their boards and teams. And it's like, there's a lot of pretty sharp people and pretty well-known people. What are they going to do? Or what would be the highest and best use maybe of a Bitcoin treasury company? And maybe there's a couple answers. I don't know.
Yeah, no, I think the highest and best use, candidly, is just own as much Bitcoin as possible and have a small base business as possible so that you get the highest multiple for your Bitcoin. Because once you're if you're an IBM and then you have Bitcoin, even though IBM's kind of going backwards, the core business is still going to be silicon. It's still going to be computers. It's still going to be that. If you're a really small company like how Saylor was prior to adopting Bitcoin, and then you were able to make your main story Bitcoin, I think that that's a huge opportunity. Now, just like we just covered, maybe that opportunity is dwindled. Maybe it's diffused. Maybe it's maybe it's Highlander theory. There could be only one, and Saylor is already there, and he's going to eventually be Bitcoin Bank. And there's really nothing else you could do to capture the same multiples that he has had. In which case, I would focus on having a business that makes sense, based on the team that you have and based on the opportunities that you see. Like for me, I trend towards digital. I see a lot of incredible opportunities in digital. The investor in me loves operating costs of digital. Like they're very knowable. They can be modeled. You can have a surge of users, but typically that's a good thing, and you're monetizing that. But whereas real estate, everyone thinks like real estate is just sitting there and you're collecting the checks and then they just roll in. But like candidly, it's a lot of times it's people not paying their bills. Like the rent does not come in, but all of the invoices and the things from the government and all that has to get paid right away. And if you don't pay that, then you have severe problems. And even if you think your property is yours and your land is yours, if you don't pay the government, it suddenly becomes theirs. So that again, I can't help myself. I always go back to like why isn't everyone in Bitcoin and why isn't everyone rotating into it? And there's been so much money created, and there's so much monetary premium across the world. And it's basically like musical chairs, and so many chairs have been pulled now. Monetary premium is them pulling the chairs, guys. Like, they're printing money. Everyone's fidelity statement is going up. Everyone thinks they're getting rich, but it's because the money's becoming worth less, and they're secretly stealing chairs from us. And at some point, the music's going to stop, and you're going to want to sit, and your assets are going to be worth 92 cents of what they were. Like you're at 8%, 92% off. So, and that's not because you did anything wrong. It's because they printed too much money, and they created a false sense of security, and they basically turned off economic gravity and reality for a very, very, very long time through a coordinated campaign of endless printing. And it's human nature to kick the can down the road. And again, they are primarily the asset owners that I just referred to, who have the unfair magnet pushing wealth their way. So like, not only are they, basically they're playing offense for themselves, meaning they're gaining wealth, the people who have access to the money printer, but then they're also debasing the currency that we're all little guys trying to save in and build enough energy to really become someone who could take care of our family for 3 generations if we needed to. But we don't have that same opportunity because the inflation, we're further away from the printer. So the inflation is hitting us much harder than it's hitting them, and they own the assets. So the inflation ultimately comes back to them anyway.
What's up with the U.S. government buying Argentine pesos before buying Bitcoin? What's the rationale there? Geopolitical for sure. The spurious claims you hear is that there are people in the White House who have connections to our money that's invested in Argentina, and they needed to stabilize that government for the benefit of those individuals. I have not seen anything in the White House, especially from the president, that indicates that he's willing to take an expedient path like that. He's taken on the chin for so many different things that I don't think he's going to take a short-term shortcut in order to avoid short-term pain. That's literally not how he's built. So, but it's a big world, and it's a big White House. So maybe someone near him got close enough to a decision maker that this is the reason that happened. I'd like to think that there's something else going on, like a broader dynamic that's playing out that I don't have enough information to assess. But I do think it's strange that we have cleared the way with the SBR to hold on to Bitcoin and to make even budget neutral acquisitions of Bitcoin. And now we have the tariffs that are generating just absolutely incredible flow of income into our country. And we could theoretically, couldn't that be directed towards the acquisition of Bitcoin? I think that it could be. And I think that at some point they're going to evaluate that. I think that would make a lot of sense. But anyway, yeah, I'm not sure why we were picking up pesos before we were picking up Satoshis. What's going on with the 4-year cycle? Is it dead, or is every podcaster or someone on a podcast saying that they're selling their position? It's the end of the cycle. Yeah. Are they going to be in a world of hurt here in a few months?
I don't know. I had a period maybe back in March or so that I thought that with the ETF and now the Treasury company excitement and the rest of the tailwinds, plus I thought we would get more of a push, frankly, from, not that I was like depending on the government, but I thought that the government was going to try to solve some of their insolvency problems by pushing some of their wealth into the hardest money that ever lived. But anyway, so yeah, I thought things would be accelerating a little bit faster than they are right now. And there's all sorts of theories out there about like what's happening to the price. Like, can it be suppressed? Well, I want to say with absolute certainty that it can be. It is a $2.5 trillion asset. And they've printed, with all their printing, they've got something like $1 quadrillion of wealth out there. Now, maybe half of that is in some kind of a squishy enough form that they can hypothecate against it and push it in places and bet against Bitcoin. And there's 2 things going on, right? One, they could just be selling Bitcoin. They could be dumping Bitcoin. They could be getting into old wallets and selling them at strategic times, like on Friday at 6:00 when there's no, you know what I'm saying? Like, there's clearly some hits that have been going on, and that's fine. I don't care. Give me cheaper Bitcoin to acquire. Thank you. But there's something, there's someone's trying to keep the lid on it. And then the other thing that's happening is they're opening up more surface area. So, if you believe in Bitcoin and you're like, dang, I think it's really going to rip, there's a lot of people, and by the way, I don't mean degenerates, I mean smart people who, as opposed to buying Bitcoin, they get in their Coinbase account and they go like 3.6x long on a perpetual, and they're trying to get more exposure to the upside, and they're trying to time the market, and they're paying a funding rate, right? Bitcoin's a contango market. So that basically means like in the future, we expect the value of Bitcoin to be higher than it is today. bullish. But you have to pay to play. So if you're going to why would you get levered long exposure to Bitcoin and there not be a cost to enter that position? And so there's small fees for that, but the real killer eventually becomes these funding rates. I mean, you pay them on an hourly basis. And if you've got a large trade, it can end up being quite a large hit. So anyway, there are folks who try to time the market. They go long, they pay the funding rate. And then what happens? All of a sudden we have a Friday, 6 o'clock mass liquidation event when we see $19 billion of liquidations in minutes. And you're just, I think that there's, I can't say who they are, but I will say that there's clearly a real push into all sorts of other coins and all sorts of other shiny things, tokenized gold and all this other stuff. And at the same time, they're creating sure, you could bet on Bitcoin, but do it on a perpetual futures market. Don't actually buy Bitcoin. And it's okay. And then again, and then the other place you can go is you can go into the treasury companies, and you can make the argument that because they have some sort of equity premium and they're able to coil up their leverage and create more, theoretically, they might be able to create more returns because they can borrow money that's crumbling and then use it to buy money that's not. And I mean, mechanically, you could totally, that just makes sense, right? So I can see why people are going after that door. They're going after the perpetual futures. They're going after tokenized gold. They're going after gold. There's a lot of things that are competing for attention. And I think that's why, and diffusing our attention. But I think ultimately fundamentals are going to win out.
You posted something that I really enjoyed, and that's when I reached out to you. It was, correct me where I'm going astray.
Go ahead.
Building in public, in the example that you walked through, it was like a SaaS product.
Yeah.
Can you kind of walk us through that? I thought it was super cool, inspiring, things in that direction.
Yeah, cool. Okay, so the premise is really simple. So the article, the website is called wellsystems.ai, not to plug too hard, but the article was called Fuck You Money. And the idea was really simple. I get questions sometimes in one-on-one interviews from friends, and they were like, yeah, but if you had to do it all over again, could you, right? Because they're like, you can't buy $700 Bitcoin again, Or my hedge fund failed, but I geeked out and learned machine learning and a little bit of Python. And then of course they had an AI boom. And then I was one of the few people who had investment banking experience and who understood the machine learning thing. So I saw lots of opportunities other people didn't. And then I was able to invest in a company that we sold to Facebook. And again, they're like, oh, that was luck, or that was timing. And it's well, whatever it is, I was there, it worked. But they were like, could you do it again? Okay, absolutely. I could totally do it again, right? So step one, we haven't, AI has changed the calculus. So I can't do it again in 2010 because, that's not allowed. I have to do it again right now. I don't get a time machine. The whole thing was if you get wiped to zero, what do you do? So AI's here. AI means that you can make stuff a lot easier. It means you can brainstorm, ideate, then develop, then design, then engineer, then implement, and then feedback test, and then you can make a loop really fast. But it also means that the value of making those things is sort of going down to zero as well, right? If the moat to make it goes down, then the value goes down. It means that you have to find a way to differentiate yourself in another way. So the point of this is that the first thing I would do if I got nuked to zero is start building an audience, right? Because if I have an audience, then I can monetize the audience eventually. But what I need to do in the meantime is earn their trust and show them that I have a point of view and that I'm good at something. And maybe I'm interesting. I think I'm all three of those things, right? So I would build a SaaS in public. SaaS back to digital. Earlier, you were like, hey, what should a treasury company do? And I said, hey, I think I would go digital because that's my instinct. Digital has so many advantages. I could spend a little bit of time developing a code base, and then I could put it up in the cloud and serve it, and then start charging fees to access it. And then I could charge my client to maintain it or upgrade it or do something to it, right? So I'm creating a piece of real estate that's digital, and then I'm able to charge and I can remote view it. I could upgrade it from my couch. If a consultant comes and says that the roof is leaking and I need to spend $400,000 fixing it, I can scan the code base and go, no, you're full of shit. My thing's fine. So basically what I would do is I would build a SaaS, and I would use AI to scan the market for an opportunity, some pain point. I would social listen. I would listen to people on social media who had good followings complain about stuff, and then I would ideate how I could fix it, build a little MVP on Lovable or something else like that. And then I would show it to them and say, hey, look, I think I solved it. Would you like to be my partner in bringing this to the market? Like, you're influential. You had this problem. I'm sure you know lots of people who had this problem. I built the solution. Let's partner. I would go do that with 5 other people. I would have 5 different SaaSes, and then I would build them public. I would open up like a couple Substacks where I would track my progress, maybe for all 3 of the, like each of these products. I'm imagining 3 in my head, maybe 1 dedicated to each. And then I would, monetize the journey. And the cool thing about building a public is that your content creation you don't have to content create. You're literally setting up a camera. You're talking about what you're doing. You're documenting it. You're building it public. You're sharing. And then, oh, by the way, you have a clip that you can just upload to your Substack, and then you can feed it to AI, and you could say, give me 5 insights from this video, and please write a 300-word summary of each insight. And then it comes out. And then, I'll start to upgrade it, start to massage it, give it some touch, some feel, maybe tell it how to tweak the voice a little bit. But when I create with AI, I already have a document from some of my best hits from Wealth Systems that I share with it. And so what I'll do is I'll record a voice note, and I'll basically say, hey, I want to write an article about the need to transition from Bitcoin to gold, and I want to make 7 points about like relative strengths of Bitcoin over gold, and it comes out, and then I say, great, let's find some quotes that support my thesis and some quotes that like don't support my thesis, and then help me make an argument against those quotes that don't support my thesis. And then next thing you know, I've got intellectual information. And the old LLMs like GPT-2 and 3, you had no way to click in and understand where the reasoning came from, but the new ones, they give you thought tracing. You can kind of see their chain of thought. And lately they're giving you attribution, so you can actually see like where that information came from. Perplexity is very good at this. A lot of the new AIs are doing this. So what I would do is I would just start communicating with people, finding a problem, building a POC, a proof of concept of the solution, partnering with someone who had a much bigger audience than me, who maybe could like inject some energy and help me get to the market much faster. And then, I'd build the SaaS in public. And then once I had those apps spitting off 20 or 30 grand each, then I would get into phase 2. And phase 2 is all about using your money to make money.
What personal characteristics do you think a human being usually has to actually pull this off? Because you have creators that are just so passionate about it, but maybe don't think of it through a business lens. Yeah. You have business people that maybe are just like dry. Yes, or sure. Maybe you have people that are just shy. Yes. They're shy, they're dry, they're just passionate. Like how do you solve that? Or
recognize your strengths, and if you're an introvert and you're passionate but you don't have a great outlet for it, then potentially look for someone to partner with who has a natural megaphone built into their spirit, and work with them. And but look, we live in a world where even if you can't find your voice, you can communicate digitally. Like you can feed your ideas into Veo, from Google, and create a video, or Sora from OpenAI, and you can create storyboard. I had a company like 10 years ago I invested in, and we spent like 75 grand paying someone to like draw cartoons explaining how our like product worked, basically. And the other day I gave the instructions to an AI to do it, and it did it flawlessly, and I didn't spend any money. So, my point is, even if I wasn't like shy and I didn't have an outlet, I would create videos and I would create tools, and I would distribute them that way. So anyway, if you're built one way, find people who are built the other way and partner. That's one of the cool things about humanity, is we're really good. It's a multiplayer game. And then, what else? Oh, okay. You asked about traits too. I think that intensity is really important. And I think that it's, I feel like we're living in a moment where, like, in society where intense people are almost shunned. If you're very passionate about something and you're so locked in, they're like, get a life, or diversify your opinion. Think about other things. No, like, if there's a problem that's really bugging you, like, you're allowed to lock in for 2 years and solve that shit. Like, you're allowed to do that. So being intense is good, and people resonate with intensity. I think it's engaging for sure. I think the other one is consistency, and I see a problem with consistency. And I think that just like how Bitcoiners have a problem because there's lots of shiny objects, and now we're like, what do I look at? Bitcoin, please God. Anyway, but what do I look at? Same thing with technology. There's a lot of of diffusion. There's a lot of technologies that are coming and getting our attention, and it's just about focusing on what you do best. And so consistency is about going tomorrow and doing the same thing that you did yesterday, and intensity is about bringing that same energy every time. And then I think the last piece is resilience, because it doesn't matter how good your plan is, you're going to get punched in the face, and someone's going to do it better and spend less money with less effort and just seem to win easier, and you're going to be like, what's going on here? And that's just life. And the ones who are resilient are going to use that as fuel. And it sounds cheesy, but it's true. You can actually take adversity and use it as a feeding stock to get better. You know, you could either be like mentally, you could calculate with it, like, oh, that's feedback from the market. How could I say this differently? What's my pitch? What's my angle? Or maybe it's like something that's not intellectual. Maybe it's like some sort of energy thing that you need to heal. But you could take the feedback and come back better. So I think the people who are intense, consistent, and resilient have, and agency too. You could argue that that's a cousin of intensity, but like there's a lot of intense people who are consistent and resilient, and they're not doing anything. You know what I mean? Like they're on the internet. They got sharp opinions. They go on spaces. They say things that sound cool. But are they actually putting themselves out there, risking failure, trying to make something happen, staking a claim to an opinion, building, seeing if it works. If it doesn't work, it won't probably the first time. That's okay. What can you learn from it? Like I gained so much from my failure stories, like even telling my failure stories to people who ended up being important partners of mine. They loved that I had a couple failure stories. Like that makes you feel authentic and real. And it also shows that you are not just showing the best hits, because people can sense that, especially with this like TikTok world we seem to live in, where it's very superficial and just everyone's trying to show like, oh, everything's great. Like, no, life's hard sometimes, and it's okay. But people who are resilient are going to wake up tomorrow and still kick ass.
What's your process for using AI, but not letting it do the thinking for you? Do you have to like take time away from it and go for a walk around the block, or what's your process there?
Yeah. So good call. So like when I'm making software, I will not say, please make an app that does X. Because again, you don't understand what's happening. It's a black box. I will say enter planning mode, or whatever toggle you have to hit to tell it to not make code. And I'll basically say, I'm looking to solve this problem, and I think that I want to build an app that does this. And here are the 2 or 3 features that I think would be important, right? And then it's going to spit out concepts. It's going to say, yeah, that reminds me of this. It's a lookalike of this. We could start with a Vite and a TypeScript app, and if we have these functions, we can get this function. So you don't start by building, you start by planning and by having a conversation. Sometimes I will find code on GitHub, which is like a giant repository for code. People started working remotely, and builders were building discrete things, and then they were trying to bring their work together remotely, and there were some integration issues. And Git is like a giant file system up in the cloud that lets us gracefully work together and merge and look at code together. So I would sometimes pull down code and ask AI what it does. And so it's a great way to both learn, like code written by really good people, not me. And so I could like figure out what patterns are like that look good, and what patterns don't work. Those are called anti-patterns. Figure out like architecture, and then I know we talked about this last time, but you could just use AI to learn stuff. Like you should ground it, meaning you should every once in a while look at another source. You shouldn't just like AI psychosis is like when you spend all day in the same chat bubble, and then you just start to the seams of reality between what the AI is saying and you're saying and what's really happening start to like merge. And that's not a nice place. Like
it's like you're great. No, you're great. No, you're great. No,
yes,
you're awesome.
Yes, exactly.
It's like LinkedIn like referrals back and forth. And you're like, oh, yikes. I don't think I'm that good.
Yeah. Well, anyway, a lot of people are starting to love it. Frankly, they're getting locked into it.
Yeah. Yes, you should go get that ice cream sandwich.
Yeah. No, but anyway, long story short, I use AI to learn about AI, and then I will talk to the AI about what my plans are, and then I'll ask it to build an MVP of that, and then I'll look at it, and then I'll ask the AI, maybe even a different AI, like a second opinion, what's great about this code base? What's not so great about this code base? Are there any security flaws or vulnerabilities? Are there any data engineering problems that are going to make this thing not do so well under scale? Like, how would I perform with 10,000 users versus just 10? So yeah, AI is just absolutely, like I teased earlier, it's not just good for building stuff. It's good for figuring out what you want to build and then figuring out 10 different versions of that thing and then figuring out what's good and not good about each of those 10 versions and then committing to building maybe 3 of them side by side by side. And then once you get them built, then test them on real users. And then, I mean, you could build a one-person software engineering company these days and you don't even need to be a software engineer.
Speaking of versions, what platforms do you use? Which ones are the best? And are there any that, we don't have to say the names maybe, but are there any that you're like, no, I'm a pass on that one?
Ooh, I'm not a Claude fanboy, and there's a lot of them. And it's nothing against Anthropic or Dario or any of the technology. I just, it lectures me too much and it moralizes to me too much, this whole constitutional AI thing. Like, I don't need a nanny state sitting on top of my AI. I'm a decentralized AI. Like I'll run local LLMs on my laptop and I'll have like DeepSeek running through LM Studio. So I will it run locally in my environment, air gapped. Like I could turn the internet off and still use LLMs in my house. So definitely like that. I like decentralized technology. In terms of like the big foundation models from the mega houses, like the OpenAI GPT-5 or the Gemini, I'm really excited for Google's Gemini 3 for that to come out. Rumor has it it's coming out on the 22nd. We'll see if that happens. The 12th of November. We'll see if that happens. But bookmark this in case I was right. And but either way, I think it's going to be, Google has so many advantages. I mean, for a long time, Google got to watch how we learned. Like, think about this. Whenever something new happened in the world, what was our first reaction? Google it. And so Google was sitting in a position where when a new phenomena would enter the world environment, everyone would jump to their computer and they would Google it. And the way they Googled it and what they said about it and what they did next, like, you know, like if they Googled some asteroid and then they Googled like, where's my church? That's like, ooh, that scares me. And I'm going to go look for like healing, like, you know? So Google was watching how people learn and they had this gigantic advantage. Now, unfortunately for Google, and I'll get back to them in a second, they lose that advantage because people are leaving search engine result pages and they're talking inside of these chat GPTs and things like it. So, you know, Google, I think, in my opinion, they came up with the attention is all you need paper. They designed the TPU, the tensor processing unit, which is like the evolved version of a GPU. I think Google has all the goods to make AI. And I think that they had them in the drawer, frankly, and because they knew that this was going to be predatory for their search business. And like, you don't interrupt yourself from making billions of dollars a second until like the market decides that it's not going to. And now I believe, like, you know, in Fast and the Furious, when Dom Toretto is like, and then he looks and he's like, too soon. Google, like basically OpenAI is driving real fast and they're thinking they're winning this race. And they're like, yes, I'm doing it. Anthropic's not even in the race. But OpenAI thinks that they're in the race. And I think Google is about to, because they acquired DeepMind. So they've got some of the best brains in the business, in the AI business. Oh, and by the way, Google Brain before DeepMind, like there's a separate entity. Those guys were geniuses too, like Jeff Dean and Jeff Hinton and all these. I mean, like some of the people who invented machine learning for Pete's sake are over at Google. And then they've got football field size tensor processing units doing computation that are so powerful and so fast. And they've got diffusion, which is like a whole different architecture to large language models. So I have a feeling that, Gemini 3 is going to kick ass and take names. And that'll be my new daily driver once that comes out, whenever that comes out, November 12th. And then we'll see what happens from there. But I think it's their race. I think it's their race to lose. Also, shout out to Elon. XAI is doing something incredible. They're not building AI. I don't know how they're building AI because I don't want to look at the leaks and I don't want to get in trouble. But there's information out there like claiming to be like what they're doing, and supposedly they're not building AI like other folks are building AI. They're not photocopying the internet and then building giant, trillion parameter models. Don't get me wrong; they're still throwing lots and lots and lots of compute at this. But I think their architecture is different and the way that they're going about it is different. And Grok Heavy is great. Grok Heavy is basically a multi-agent system. And so when you type in like, what's the capital of Paris? It knows that it doesn't need a lot of horsepower for that. You don't even need to hit the NOS back to the race. You could just drive like in first gear and win. So it only sends out one single agent to answer that question. But if you said like, build me the perfect SaaS to sell to doctors, in Cambodia, whatever, it might spawn up like 3 or 4 of these Grok agents. And one is going to focus on the marketing, and another is going to focus on the go-to-market, another is going to focus on product design and engineering. And they're going to work like independently. And then they're going to synchronize their answers and present to you. This is Grok heavy. You have to pay like $200 a month for this. But in my estimation, it's worth it, because just to see like a different way of solving the problem. Also, I have OpenAI, I have Gemini, I have access to Anthropic, but don't use it much. And I have Grok. And I will note that even though I love Google, their answers in and OpenAI's are very similar. Like they are very similar. Grok says stuff that is completely unique. So I've got to give them credit for not just copying each other's homework, but building something completely unique over there. And I wouldn't bet against that team in the long term, because obviously everything that Elon has set his mind to, he has succeeded at. So I don't think that I don't think AI is going to be something that he falls short on, especially because that's an input driver that's going to make all of his other companies more valuable. Like it makes Boring Company more valuable. It makes SpaceX more valuable. So this is very much like this is the new internet times 10, AI.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Hey guys, today's episode is brought to you by StampSeed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at the Win in Las Vegas, February 23rd through the 26th, 2026, for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. What's the timeline to a single person company reaching $1 billion and $1 trillion?
I imagine less than 3 years until you'll hear about like a single person player generating $1 billion of enterprise value just completely by themselves. I confess I can't imagine what the business model is, again, because I would be doing that right now. No, but I think that it's absolutely possible. Now I'm going to be cheeky here, but if they keep printing money like they're doing, it's going to be a lot easier. Mm-hmm. So that's the other side of this equation. People talk about like, hey, what's going to happen when Bitcoin's 20 million? And, again, this is like another cheesy thing you hear a lot of people say, but I'm not rooting for that to happen very fast. If it happens too fast, we're living in $5,000 or $500 hamburgers, and a lot of people are going to suffer, because again, like I said, they printed money, and the fidelity statements were going to the moon, and everyone felt rich. And they took chairs away. And if the music stops again, we're going to have to find a place to sit. And by that, I mean the monetary premium looks like wealth. It feels like wealth. But when the tide goes out, it's going to go out. And there's a lot of wealth built on fake wealth, frankly. Like there's a lot of like stocks that are owned that are really there because someone collateralized against real estate that actually has its value that's been inflated because there's been too much money printed. So when the monetary premium starts to get drained out of real estate, and it will, and it goes to Bitcoin, suddenly those collateral, the collateral that's pushing into the stock world, suddenly they have to start selling their stocks because the real estate's down, and then everything's levered against everything. So yeah, long story short, I can't remember the question, to be honest, but
that's great.
Buy Bitcoin.
Could you take us through a little bit of your background and what you're working on right now?
Cool. Yeah. So I started as an investment banker, but I got better. Then I launched a hedge fund, and I wanted to machine read financial statements. Hedge fund failed. But I got the bug. Like I saw the power of technology, and I saw like, wow, this thing could do what 100 caffeine-filled interns can do in 3 weeks. It could do it overnight, go through every 10Q and the whole sector and read it and score it and do all. And I'm like, wow. So I started investing in technology companies, and three went to zero. First three went to zero. The fourth was an identity verification company that we sold to Facebook. And then I've had a couple of exits since then, and now lately LLMs have figured out how to do math. The joke with large language models used to be that the second L stands for language. And so when you are, it's not so good at necessarily doing math problems because the way that they tokenize the math problem that you put in front of it, the AI brain wasn't really seeing the entire problem like you and I see the entire problem. It's fracturing it into pieces and then doing something called matrix multiplication with back to those TPUs that Google is pimping. And basically it's like predicting what's going to happen, what word is most likely to come out next, and what's the most accurate thing that I could say to make this user basically like, what's the right thing to serve? And based on the temperature that you give, the paths that you could go down, the AI, get bigger and wider. Like if you've got a very low temperature, it's basically not going to deviate. It's going to say like the same thing almost every single time. But if you give it a fever and give it a really high temperature, it's got a much bigger area that it can walk through, but it might say something a little bit wonky. So because of these challenges, it was having a hard time AI was doing math. And then about a year and a half ago, we realized, well, then why are we making it do math? Why don't we just give it a tool? Why don't we say, hey, you know what? When the math part comes, you go spin up a compute instance, do some Python, do the calculation, hand me the number, and I'll use it in my infinite intelligence after that, right? And so this is how agents got spun up, and this is how tools got spun up. And an agent, a robot is basically like an automaton going around and doing stuff in the real world, right? It's like an embodied intelligence, right? Okay, an agent is like a virtual robot. It goes around on the internet or in your browser, or sometimes not even in a browser, just going through APIs and the ones and zeros, and it's doing stuff. And it could do research. It could come up with a list of like the last 3 tweets that you posted and coming up with a synopsis and storing it in a file for me, so that when I like send you a text, I can have like something relevant to say to you, So anyway, so these agents, they empowered AIs to finally do math. And so I got excited because, my background is in banking and wealth management and hedge funds. So I'm like, yeah, maybe I can make like a virtual hedge fund. Like maybe I can make a totally synthetic hedge fund, like back to Grok heavy with its multi-agent system. Maybe I can have a portfolio manager agent, and then analyst 1, analyst 2, and then an analyst that's focused on like market structures, and one person that's focused on the latest news, and another one that's just reading like the insider followings for the different companies and tracking like when the big insider buys are happening, because people sell for all sorts of all sorts of reasons. They got to sell for taxes, they got to sell because there's some other big opportunity. Grandma broke a hip and you got to pay for the titanium. There's all sorts of reasons, but you only buy for one. So I like to watch insider buying. And so like I could have an AI doing just that. Anyway, so I started thinking about this and looking into it. And I realized, one, I'm building this on the side, but just for myself. I realized that there's so much noise out there and people building AI agents. And then I saw the problems with AI. Like the data, it has to be in this, relatively speaking, the same place. If you've got some data here and some data here and some data here, and you're asking the AI to make decisions, you have to pull it into the same place. Okay, fair. Then you have to normalize the data. What does that mean? Well, like if I'm got 3 different tables of spreadsheets, and one says United States of America, and one says USA, and one says America, and then I say, how many clients do I have in America? There's a very high degree of certainty that unless I normalize my data, it's going to say like 6 or whatever the answer was to that third column. And it won't even give me the other ones, right? So because I didn't say, please give me America or United States of America or, So step 1 is you got to, unify your data. Step 2 is you got to normalize it and get it into the same state. This is big with even bigger, frankly, with numbers than with words. But I was just giving an example that would really work with everyone. Like you can normalize, if you've got one giant number inside of a range of numbers, it could throw off the count. Like your average suddenly isn't your average anymore because you've got one outlier that's like screwing up the math. So sometimes normalizing just means snipping out data points that are not like the rest of them and then imputing a data point that is. So you've got to ingest data in the same place, then you got to normalize it. And then frankly, so what? An AI agent's got a really good set of data. It doesn't know how I want it to work. I have to train this thing. You have to train the agents, and you have to explain to them how I work. What are the uniquenesses of that? It's really difficult. And so, I kind of put that project down. I was like, I'm not going to do the virtual hedge fund thing, and instead I said, well, if AIs can do math, why can't they do accounting? Maybe I don't want to go be a virtual hedge fund manager again because I failed the first time, but I could be a decent, accounting technology executive person bringing incredible tools, AI, to the accounting profession to help them serve their clients better, really to expand margin ultimately at the end of the day, to get more units of work done in the same amount of time, and also to free up more time for the people inside the firm to do strategic work, real value added work, stuff that's client facing, stuff that actually makes the firm more money and actually increases their enjoyment about working at the firm. So yeah, I launched a company called Vega with 2 other co-founders, and we actually formed the entity about a month ago, and we've already got our first client, and closed our first round of outside capital recently, and that was nice. That's usually my role, so it's nice to have other people jumping into the fray and joining us and building out this thing with us. But we're starting in accounting, and then we're going to go into other verticals because obviously what I'm talking about is basically just using AI to give you a better operating system for your company, and all companies are moving information from one place to another. So we're starting in accounting, but we're going to be moving out from there as soon as we digest what's on our plate and serve those people really well.
Before we get into after hours, where can people connect with you?
Cool. So I like X.com. It's my last name, McDonagh, and then my first name, Matthew, Matthew. That's my handle there, McDonagh Matthew. And then I already plugged wealthsystems.ai. Those are the 2 places that you can subscribe and check out what's on my mind and what I'm thinking about. Also, if you like the tech stuff, lifeinthesingularity.com, long URL, I know, but that's where I write about technology and kind of what I see happening next.
Awesome. Matthew?
Thanks, Tim.
McDonagh. Or just Matt McDonagh. We're going to go right into after hours.
Okay, let's go.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. What's the most fantastical theory you have when you combine everything that Elon's working on?
Woo. Okay.
Maybe just 3, 5, 10, 20 years, just some reasonable amount of time.
Yeah. Okay. So I think, so Elon's trying to open up another save slot for humanity. When you're playing a video game, like you have like these save slots back old school. And if you've got one save slot, one place you could save your game, then if the file gets corrupted, you don't get your game, right? You're screwed. So right now, humanity, all of our information, our game is on Earth. And if we get a burst of gamma radiation, if the sun burps, if there's some event that the super volcano under Yellowstone goes and it's even bigger than we thought, there's all sorts of things that could happen. Well, it would be a shame if the story stopped. And so I know the reason why Elon's so interested in SpaceX and doing the Mars thing is because he wants to open up another save slot and get humanity's intelligence and then eventually our culture and then eventually our bodies on Mars, so that if there was an event or something untoward that happened on this planet, we would get another crack at it. So I hope he's successful with that mission. That's hugely important. And Optimus is going to play a huge role in that, because Optimus is going to be able to make that trip before humans are. There's radiation out there, back to nuke and stuff. And there's this Van Allen belt thing. And there's lots of difficulties in getting human beings to Mars in one shape. In a good shape, I should say. And so robots are a good first step. Looking forward, it's not just about robots, is it? Right? He's helping us harness the power of electrons, capturing energy from the sun. We capture famously like less than 1% of the solar energy that comes our way. And when you factor in thermal, it's even less than that. And then we've got a ton of geothermal energy underneath our feet. So I think he's trying to help us lower our cost of energy, and he's helping us increase our save slots for humanity. And he's getting really into AI, which I'm excited about. Well, he's not getting, he's been for a long time. The guy was co-founded OpenAI. But I think he's understanding that AI is an incredible tailwind underneath all of his other pursuits. And that if he can get us to ASI, or artificial superintelligence, then he's going to have, an engineering team capable of creating metamaterials and alloys that could get us to Mars, faster, in a more resilient way. It could create novel and exotic power technologies and all sorts of stuff. So, yeah, I think ultimately he's trying to build a giant computer capable of giving us the solutions to any of the problems that we might encounter at any point in the future, and that's good on you. That's why I initially gave Gemini the shout, but then I was like, no, he needs to give some love too, because it would be so easy for him to just go to the dark side and partner with one of the big clouds, and but he's actually building out his own. So I think that's really cool.
What's the most effective way for a creator from zero to build an audience? Is it long form content, short form content, all this stuff?
Yeah.
I've realized over the last year can stack up to where you're like, I'm out of time.
Yes. Unless
you have a team.
Sure. Yeah. AI can help you gain more time back, right? Back to that old thing. But I think, not to be cheesy, but I think the best answer is the one that's best for you. Meaning, if you are able to speak in front of a camera and you don't say and like and and you are able to hold a conversation, I would get in front of a camera. Because this is evergreen. My kid's going to watch this. How cool. Hey, my AI is going to probably watch it whenever you publish it. When are you publishing? It doesn't matter. I'll feed it to the AI. And, long story short, this is a evergreen, durable asset. So video for me is probably the best place. I think it's very smart how you've invested so much into it too, because it's very, very, very smart. Also, you can take video now with video to text, and you can break videos down into text. So you could record yourself talking for 15 minutes and rip out 20 Substacks in 45 minutes. Mm-hmm. So I record audio because I think that video is not too many pixels, but like it's a lot of information. If you think about what a video is, it's really just thousands of pictures, and that's a lot of information. So the audio is a little bit cleaner and crisper. So I usually just record, like I said earlier, like a 5-minute just kind of blurb. Usually when I first wake up in the morning, I'll have an idea and I'll record, and then I have a whole bank of them in my phone. And if I hit a dry spell where I don't have anything to talk about, which is let's be honest, never, I'm able to go in there and say, hey, here's one. And I throw it to Gemini and I say, hey, let's talk about 5 different blog posts I can write based on this content. And then sometimes I spin off series. I'm like, hey, that's a good idea. Let's turn this into a 3-part series. So you could use your content to make more content. I think that's one thing that I would say. But yeah, if you're comfortable on video, do video. Building in public is a cheat code because you're working to build, but you could document the build and you get free content for that. So in my opinion, I think it's very smart to do that and pick a social media channel to be your main one. I'm not saying you can't have like a LinkedIn and an X and a Facebook and a TikTok, but I think that you should have one place that the audience can reliably find you and know like that's where Matt is the freshest. So for me, that's X. But pick one and then also be multimodal. You know, I have a Substack. I post video content. I sit down with my friends like you, Tim, and I do all that because there are readers, there are listeners, there are viewers, and unless you are multimodal, you're unlikely to capture the attention of all the people that you need to. And I think in the age of AI, being able to make stuff is less valuable than being able to distribute it and being able to communicate the value of it and what's unique about it. So I think that distribution is the greatest edge and it's becoming increasingly valuable. And I think that the ability to create is becoming commoditized, and that's okay. You know, like there shouldn't be a technical moat. The people who used to know how to code made a lot of money. You know, I've got a buddy who's like a staff engineer at Netflix and he made $700,000 a year. You know, badass. Like he's data engineer, very good at building pipeline. He's Netflix, like all of us streaming because this guy was able to build such good data pipelines. But that is an incredible earning power that is now available to anybody who's motivated enough to say, okay, what are the principles of data engineering? Please teach them to me. Give me 3 projects I can build to learn data engineering. Give me instructions on how to build them. Help me build them. Okay, great. Then I put them on my portfolio. Then I start sending messages to like anybody who will listen. You know, you can get in front of people so easy now. So yeah, I would build distribution and just focus on being passionate and showing what you care about, and worry less about filtering yourself and more about showing people that you have a little bit of a battery behind you and you've got some energy behind you, because people resonate with energy, and that's what we're all looking for. We're kind of like moths to a flame in that way. We like people that are vibrating at a higher frequency than us. And so that's what I try to do. Just keep reading, keep learning, keep growing, use tools, work out, buy Bitcoin. It's a good life.
How do you figure out which platform is your platform? Will it just kind of be obvious, or is it like you're gardening, you're on Instagram, well, you're Bitcoins, you're on Twitter?
Smart. Yep. I would think about ICP, ideal customer profile. Like, who are you trying to talk to and where are they going to be? You should fish where the fish are naturally. So I like tech. I like cutting edge stuff. That's all happening on X. I'm also an investor and a business person. So I have a presence on LinkedIn because there's certainly a lot of interesting information on LinkedIn. And I think that it's giving yourself the stereoscopic ability to pull information from multiple domains and then synthesize together what you've learned is an advantage. And I would encourage everyone to do that. But yeah, think about where your audience is and think about where you're more comfortable communicating. Twitter is a little bit shorter form, a little bit more like punchline rapping, and like, you kind of have to make a noise to get stand out. And LinkedIn, it's about like, what's the caliber of the information level inside your post? And, can you write slightly in a unique way that doesn't seem like AI slop? Because there's a lot of that going around.
What's one thing that you learned in 2025 that surprised you?
Okay, so I started getting scared about quantum again. Mm-hmm. Okay, so when I got into Bitcoin, I read about a couple of problems. And one of the problems is obviously, what if like the government says Bitcoin's illegal, right? But you know what? Governments have tried saying that. China's tried saying that. It didn't stop like TikTok, next block, right? So that wasn't really a problem. So okay, fine. So I wasn't worried about that anymore. Then I read about quantum, and I'm kind of a geek, so I'm like, oh man, like opening up 1 million portals and trying unlimited math problems until you hack into my keys, like that sounds scary. But then you learn about like since 2015 there have been quantum proof cryptographic standards, like the lattice cryptography. Like basically. Bitcoin works on an elliptic curve, and we have like private keys, and then we're able to very easily generate like a public key, but we're able to maintain our private keys, and there's like an asymmetry essentially. So it's easy for us to like look out through this portal, but you can't. It's like a door at your house. Like you can look out and see out into the hallway, but they can't look into your home. That's elliptical curve. And one of the cool things about it is the keys are very light, so it's easy to move. And anyway, lattice cryptography is a little bit different, right? It's based on like a grid-based system. So imagine 1,000 dimensions. We are in 3 dimensions. And then we're talking over time. That's the fourth dimension. Imagine if we just, I don't know, added 996 dimensions to this bad boy. Just try to think about what that means. And then I made a dot here and a dot there. And I said, you had to take the shortest possible vector from this dot to that dot. And you have to take all these dimensions into account. It's not just about like left, right, up, down. It's about all these dimensions, right? Very difficult problem. It's like impossible GPS. That's a lattice cryptography. That is a quantum resistant cryptography. It is very, very, very difficult to throw a bunch of math at that problem and actually figure out the right way to get through, because there's just it's basically brute force proof. So why didn't we use that to begin with? Like, why didn't Satoshi use that? Well, I think it might have been invented after Satoshi did his thing, so that might be why. But also, like I said, the keys are heavier. Like, it takes a lot more math and a lot more compute to make those quantum, those lattice keys. And so, frankly, I understand why they use, elliptical curve, because they're trying to make these transactions fast and they want Bitcoin to become a medium of exchange, ideally. But I'm so fine with with the wealth battery use case. Like, I'm okay. I don't need to buy Bitcoin, use Bitcoin for everything. Like, I'm okay with transacting in L2. I'm okay with Lightning, as long as, ultimately it's underneath the Bitcoin standard. So anyway, yeah. So so then there was a lot of quantum noise coming out this year, and so I had to reread what the heck is the defense against this thing and what's going to happen. And the long and short of it is these elliptical curves are protecting more than just your keys; they're protecting your checking account. So I think if a quantum suddenly emerges and it's stable at room temperature and there's no error, the error problem has been fixed and all the other issues with quantum have been fixed, I think that we're going to have some time to move our Bitcoin over to quantum proof wallets, because frankly, nation states are going to be having their sovereign bank accounts drained, and Chase Manhattan is going to be drained. And so long story short, the problem is far away from being an actual problem. And we already have solutions dating back to 2015. So as we get closer to seeing quantum get to actually being really a problem, I know that Bitcoiners are just going to get more and more focused on pushing over into some sort of a true quantum proof, not just quantum resistant, which is right now, but a quantum proof wallet, which hasn't been invented, but it will be. Also, they haven't fully made quantum. So to ask me to fully make the defense before they fully make the offense is kind of silly, I think. But yeah, that's what I've been learning about lately. Is quantum a problem? And the answer is no.
Awesome. We'll leave it there. Matt, cool. We'll do this again.
Yes, sounds good, Tim. Thank you.
Thanks.
Appreciate you.